Hey guys, what's going on? Welcome back to another weekly forecast. And before we get started, I'm just going to run through the VIP results from last week. As you can see here, we did take 5 losses last week. Obviously, Wednesday was a rough day with FOMC, but we ended up catching our decent buy trade just before FOMC, which was shared on the free channel. So we started off Monday trading US100 only. There was no setup on gold. I was waiting for my sell limits to actually get activated. And Tuesday, I was away, and then I think it was this Wednesday buy and Friday, which was a great day because usually US500 on Friday works pretty nicely. I did actually call out this where are we? It's on the free channel. This gold sell position, where I was expecting price to push up in towards this purple box, and then price did just that after it tapped in and went towards the downside, and that's exactly what I would like to talk about today. So without further ado, let's jump onto the charts and let's go from there. So gold pretty much did a decent pump up towards above 2,200, which I expected to happen. Price sort of pushed rapidly towards the upside with the FOMC release, and then the next following day price retraced all the way back down, and then on Friday we were expecting the same thing, where we were expecting a retracement in towards this fair value gap, and then you ended up getting a nice push down below these relatively equal lows, which I was expecting, but unfortunately I got busy around this time, so I couldn't enter this trade. However, we did jump on to the US100 trade instead, so that's okay. You don't have to sort of catch them all, but as long as the analysis was correct, that's all that matters. So pretty much really like what I sort of go for is whenever you're trying to trade in the market, you would like to look to trade above the midnight open or below if you're trying to buy around the midnight open. The midnight open really gives us a sort of when price is sort of oversold or overbought. That's sort of my sort of divergence I look for. So around here I did mark up, this is Friday setup by the way, so I'm going to quickly break down Friday's setup before I go into the weekly forecast for next week. Price sort of did push down and continued to push down here, and then we ended up getting consolidation throughout the London session, which was around about here, and then I was expecting for price to swiftly push up just before the 2 p.m. news release with Chair Powell speaking, and we also had an imbalance area which I was watching right about here. So that's obviously the 15-minute imbalance, the 1 hour imbalance. If I go to the 1 hour time frame, where it's right here, so right there, and you can see that price filled that perfectly, and then we ended up getting a reversal to push price back below the London session lows and the equal lows that were created there, and also filling the imbalance that was left from the FOMC release. And I think price spiked just below it. Yeah, yes it did. So we had liquidity just below the FOMC release candle, and look at that, price just went and tapped. Let me see if it did actually break it. The open on this is 21.57.170, and the low on this is 130. So yes, it did spike just below, and then that's when you ended up getting the retracement back up because liquidity was collected. So that was your breakdown on your Friday trade that you could have got. Thursday was a tricky day on gold because again I was expecting price to push up higher, but price didn't give us that key sort of that A plus setup that we were going to get a nice big sell off. So we didn't capitalize on that, but we waited for the next day, and then Friday gave us a nice clean trade, like what we had here, where price did the same thing. And how many pips is that? So we technically would have entered around about here. That's still a 180 pip trade, 170 pip trade. So you don't need to catch all the setups out in the market. So you don't need to catch this whole big move, right? You could just wait for a much cleaner setup, which was Friday, and then end up catching just your decent amount of pips anyway. So it's all about patience. I think you do get a sense of FOMO. I know a lot of people in the VIP group were like, yo, what's going on, because price did just keep pushing down, but you just wait. If the price is not there, you come back the next day, you see if you can get that continuation move the next day, and if it does, you can see that it ended up playing out quite nicely. But that is pretty much that on the breakdown on the gold trade. So let's sort of go in and look at the analysis for next week. So price has, let's clear out all of this stuff. So we're going to start on the weekly time frame. Now you see that we have we have rejected quite a lot after break, taking out these previous highs on the weekly time frame. We have these lows here, which are the lows for this is the range I'm going to be focusing on in the next week. If you go onto the daily time frame, you can see which lows there are. This, and then the high that was got taken out, which is here, right there. So I start off by marking out my sort of lows and highs for the week, and then we then drop down towards the smaller time frames, and then we can start looking at where price is. So right now, price has pushed up from this area here, taken out the previous high here, and actually extended quite a lot, and then price pushed back into the range. Normally what you'd see is that this is sort of a break and retest structure where price could be likely to push back up within this area here. We have an imbalance right there, so that could be a sort of setup where price could retrace into there. Now if we do get that by keeping this level intact, I'm still expecting for price to push higher. Yeah, that will be an indication that price would like to continue higher, continue its trend, and push back above the 2,222 level. Now that is sort of my bullish scenario, but on the flip side, if price would like to push back below these equal lows that we have here, price would like to break below here, then you're likely to sort of see a retracement, and I'd expect that to sort of set up your sort of bearish continuation here on gold. Let's move this towards the side so you can see a lot more. That would be a class as a break of structure. If we look on the daily time frame, and we remove that, given that break of structure, price can then push back within this sort of range that we have here. So you're likely to see a price to break down, retrace back up, and then push back down to fill this bullish impulse that we had. Now this sort of fits in nicely with our analysis on the dollar index, where I've actually been watching this throughout the whole week. You can see that price ended up pushing out off this volume void that we had here. So you can see that we have a gap here. Price retested that, and then we had a push up, and then we left a fair value gap, which is actually filled in with FOMC. And once it was touched, the next day, and this is where we got that big sell-off on gold, the dollar index was actually climbing, and I'm expecting price to keep pushing up above this high to fill this fair value gap before we see any sort of retracement. So starting off the week, we could see more bullish moves on the dollar index, which means bearish moves on gold, and then we could see price to sort of ease off a little. But I am bullish on the dollar index. Give me a sec. The reason for that is on the weekly time frame, you can see that we had price break up above this area here and create liquidity. We have weekly level liquidity up here, so I don't have a weekly box, but I'm just going to put that as a it's disappeared. Give me a sec. There we go. So you can see that price is retesting off this order block that we had here. This is the weekly order block. That was also the volume void there. So price has pushed up, retraced, and now it's pushing up back towards above this high here. So I'm expecting price to at least attack this previous high, see what sort of reaction we get, and if you can, the next target would be back above this high and potentially in towards this. So I'm expecting bullish moves throughout this month and the next following month with the dollar index. So you likely see price sort of retrace on gold. You know, when you have a bullish dollar, you're likely to see a risk-off sentiment with gold. So you're likely to see gold drop, and the same thing applies for your currency. So this is something that I am watching as well. So on the daily time frame, I'm expecting the same thing, expecting some sort of push back down, perhaps a retracement, and then a continuation lower on Euro USD as well, because again, this correlates around about 90% of the time against the dollar index, and similar sort of thing with GBP USD, which I'm watching. So I'm starting to incorporate this stuff into my trading, because I understand that when gold is at that all-time high, it's a lot harder to trade because there's pretty much nothing to go against it on the left, as in there's no price action to sort of see where price could have resistance because it's trading at an all-time high. So once price sort of gets back within this range, we will have sort of guidelines to go up against, and why price previously reacted around this price, it's left imbalance, you know, and then trading gold could be a little easier. But yeah, once you get something, you want to sort of slow down your risk. You don't want to trade every single day when price is getting up. Yeah, I know it's exciting that, you know, gold is sort of pushing up, but you won't get moves where price can revisit certain levels. Something like this buy trade that we took back in February, at the start of Feb, where price ended up pushing up with FOMC. The same thing sort of happened. Retrace for at least 2 months, and then price tapped back into that same area, and then look where it went. It just continued pushing up. Now the same thing could be happening again here with your bullish FOMC move. Price retraced a lot quicker. Could we see price sort of push up straight away, or do we want to see that sort of break, retest, and continuation lower? And this would be based on, I'm much more favoring this sort of move because, again, I am bullish on the XY. Let's see if that was not spelled correctly. Yeah, there we go. So I am bullish on dollar index, so I'm expecting something like this. I would like to see price break structure, give us that retrace, and then we can get a decent sell position within this area here, collecting this liquidity and continue lower. So that's sort of my outlook on gold going into next week. I know we have people sort of asking if there is any Nasdaq US100 analysis, but what we ended up having, I'm going to break this down for the VIPs, but we ended up catching this decent buy move here, hitting take profit 2, and then I ended up closing out the trade. But going into next week, price is above the previous high here, just collected it, and we have quite a lot of liquidity so below it. So price did tap just below these previous lows, ended up attacking the highs, but we still do have this volume void, so I'm not forgetting about this. Price could turn back and tap into here with the bullish dollar analysis. We could see indices start dropping. Going on the weekly time frame, you can see just tap that, could get a retracement to continue higher. So I'll be looking for, we'll go on to the 4-hour time frame. For now, this is a key level to watch, this area here. I want to see what happens with price around that level. Price has I still expect price to push above this previous high. So if price wants to slowly move back down at the start of the week, I still will be expecting bullish prices on US100 to at least attack this previous high here. That's what I was targeting on Friday. Maybe this might happen as soon as market opens, because this is what I was trying to get to. Price retrace back down. I was expecting Friday to at least push above the previous high, but we didn't get that. So perhaps price would like to do that at the start of the week, or push back down here and then attack that previous high here. Once this previous high is taken out, I will be waiting. I will be out of the market, trying to see what sort of price action occurs, whether price wants to sort of fall all the way back down, depending on when it happens. If it happens early on in the week and this high is taken out, you would likely see the rest of the week be bearish. So you're likely to see price attack the high, and then towards the rest of the week, price pushing all the way back down, potentially back towards this low and where this volume void is. You know? So this is how I sort of do my analysis. And going into next week, let's see what major news events we have. We have durable goods on the 26th of March, which is on the Tuesday. So we could see some decent volatility going into there. And then we also have, if I look at the calendar, 28th, yes, we also have GDP as well. So we have a decent news events here. And on Friday, Friday is a big day, especially for news as well. We have core PCE, personal spending, and personal income month on month, and that is 8:30. So Friday, you're likely to see setups. Is the news on Thursday? Yeah, so Thursday, you may see a manipulation going in to Friday, which will set up a move on Friday. Or what you likely see is you likely would see a significant move on Thursday. But because we have multiple news on Friday, which is you have the Powell speech at 11:30, and you have the personal income release at 8:30, 8:30 could be the manipulation move for 11:30. So this is what I like to sort of look at. If you have two news events on the same day, you may have, you know, one news event pushing the price up, and then the main news event actually puts it in the direction. So you got to see where price is at before the 8:30 news. So if I mark this out for you, say for example, this is the 8:30 a.m. candle just before, and this is our key level, which is up here. I don't like this Grammarly icon that pops up. Let's see. This is our key level, for example, that we've been watching. Say for this area here. Say this is an example. Okay, just gonna quickly break this down for you guys. So say we have an 8:30 a.m. candle right here. It's just opened just before the news. 8:29, for example. You have your key level up here. 8:30 a.m. with the news could push price up towards that key level, and then what you could have is at 11:30, you could then get the main move to the downside where it was expected to go. So this could be the manipulation event, pushing price up, taking out previous highs, taking out stop losses, collecting liquidity, and then with the speech you could get the move back down. So that's something to do. So you know, it's never actually like the move down with, like, if you're expecting a move down, you could be like, okay, there's news coming out, and then price to move down. But if it hasn't gone to your key level, then you sort of want to sort of wait and stay out of the market. But that's pretty much a little explanation that I would want to give you guys there, and that's pretty much it. So yep, I'm expecting a sort of bearish move on gold. I would like to wait and see what price does on market open. If it breaks below the previous low, this will give me a sign that right, price is breaking structure. I would like to look for a sell setup going in towards the rest of the week. But that's pretty much it from this weekly forecast. It's been Always FX. Peace out.